Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson. And the market's moving down today. Slow grind and a bleed, basically, to the downside after breaking here the blue line we had drawn in from yesterday. Also getting below some of the other moving averages in the charts we had drawn. Held up quite a bit, if you noticed, at the especially the 200 moving average on the SPX. We'll take a look at some of the other indices and see what they did as well. But you can see the slow grind down today. We did not break the more major level here on the Indu, which was my 10,275 level. It's actually dropped a little bit now. I'm going to call it 10,250 because the 200 on the 60 minute is slowly working its way down. So let's call it 10,250 now. We did get close and we did break, ultimately, some pretty sizable levels of support on our way down. If we take a look at the daily quickly, though, you'll see here. Here was the tag of the 50, and now we've come back down. Most interesting to note is what? Yes, the break of the 200-day moving average. Anybody looking for a trade, that was the place. It was only good for about 50 points. We didn't see a huge amount of accelerated selling come in at that moment. But we did see a pretty nice move below it and ultimately a close below it. Not much attempt by the bulls at the end of the day to even try to reclaim this area. So now, in true fashion, I will give the bulls at least a day, maybe two, depending on whether or not we move sideways or down tomorrow, to try to reclaim that. But any further moves to the downside here could mean some more bigger bearishness in the market, especially back to this blue line. I love to see these blue lines broken and then retested. We'll see if that comes into play later on. But interesting to note that the 50-day now has held. We have the potential reversal candle confirmed today by the big move down in the markets. Watching tomorrow for breaks below that 10,250 area. And if you want to keep note, you want to make sure you have the 10,175 area on your charts as well. This 10,175 to 10,200 should act as pretty strong support. NDX on a 60-minute also bleeding to the downside. The one thing I did notice about these pullbacks, though, guys, is they were so far, in a pretty uniform manner. It's been down, it's been up to a good, I'd say, 38.2% or so Fibonacci retrace, maybe 50% retrace, and back down again. So when I say uniform, I mean it's been very, very calculated, very slow. This is not always the most bearish of sentiments, even though we are going down, even though we have been grinding lower the last few days. It doesn't necessarily mean that overall it's really bearish for the markets. We need to see the selling coming in a little bit heavier, a little bit stronger to the downside than what we have been for me to be sold completely on the next big bear move down. So keep that in mind. Don't let your bias get ahead of you on this one. We should see pretty sizable support right down here, about the 1875 area here on the NASDAQ, followed by the 1865-ish area below that from a 60-minute standpoint. From the daily look, you can see here the gap up, move right back down below the 50-day. Here today, another confirmed move down, so this bearish engulfing did do its job, and it was a confirmed reversal candle today. I love the fact that the NASDAQ gave people an entry to the short side by coming back up and retesting this 50 one last time, giving a lot of us the 50-day at 1919.17. And the high today at 1917.26, so within 2 points, giving people a great opportunity to get short the market if they wanted to later on, or I should say early on in the day. You can see it bleeding down back into the 1880 area. We talked about that. It was 1880, then 1890, then 1900 for my marks on the way up. And the same is true on the way down. Now looking for any further bearishness to pull back to about the 1853 to 1834. That would be a very, very logical place to maybe see a pause break, or even the stock starts to turn around and move its way back up again. So at this point, it's certainly not out of the realm to see us come back and test at least the 1853 mark. That would make very good sense to me from a charting perspective. The weekly, it is only Tuesday, but not looking very good for the bulls so far. However, it's very early in the week. We've seen many candles look one way on Tuesday and completely different by Friday, so we'll leave that alone for the time being. SPX on a 60-minute. This was big here. Breaking below the blue line, below the 50, below the 200 all today. The 1110 area was a major level to get below. 1100 was the next major level. My subscribers were sent notices on this about keeping an eye on this particular move and waiting patiently for this break to happen below this particular level. We finally did get the break, offered us a little opportunity to make a little bit of money for those that followed along today. I have been short the market already, so I got in 11:15 and then again up here at 11:30. Subscribers, if you're a subscriber, want to take a shot at being a subscriber, you would get those type of notices and alerts when I'm entering and getting into certain things. So I've been playing this down for a while. I'm going to let it run and see what happens. SPX on a daily as well, coming up here to retest this upper level, and now falling back down. Interesting again that we are below the 200-day moving average. This has just been a booger right in through here. This is the last time you heard somebody call something a booger. This has really been a booger, and it's been holding very nicely as either a resistance or, pow, once above it, support, support, support. So here today we see a break of it again. Are we going to dance between it? It's a little bit early to tell, but you have to give the benefit to the past, and that is I would watch now on any retrace for this area to hold as overhead resistance. It is now up around that 1110 area, and let's call it 1111. So keep that on your charts. Looking at the 20-day for the next logical place to hit, which is only about 6 points below where we are now. From a weekly standpoint, right in between the 20 and the 50 again. So we'll see if this turns into anything. However, there are some trades actually to be looking at within this weekly chart. And once again, playing it with the moving averages. VIX on a daily, moving up today, up about 9%. That is a very decent move by the VIX from a